I have never paid capital gains in my life. Why should I redeem my investments from mutual funds and pay taxes on it when I can use something called loan against mutual funds? Guys, welcome to the channel. My name is Niraj and I talk about personal finance and credit cards on the channel. I am also a partner at Holistic Wealth, wherein we help people like you plan their investments, plan their insurances, plan their credit card spends, do their tax planning, tax filing, and a lot more. So if you're interested, feel free to reach out through the form in the description box below. So it happens sometimes, right, that you need money for an emergency or you need money because of an extra spending that you have done during a month, okay? And if you're investing your money for long run and do not have money set aside in your bank account for such kind of spends, then you will probably end up withdrawing money from your long-term investments. Okay, so guys, I am somebody who has most of my investments in equity. Okay, most of them investments are in equity. There are some 10-12% in fixed income mutual funds as well, but largely it's equity investing. And when I'm doing in equity investing through mutual funds, there are definitely going to be capital gains taxes. But every time I sell, I don't want to pay capital gains taxes. Just because I've spent extra money, I'm not going to do that. So what should be done? What is the next best alternative? The next best alternative is something called loan against mutual funds. This is a fantastic product and a beautiful product, and I'm going to share a lot of secrets today which can help you plan your finances better. So loan against mutual fund is a very simple product, guys. It's a loan against a mutual fund. So for example, if you have 1 crore rupees of investments in mutual funds, what you can do is you can tell a bank or a non-banking financial company like Edelweiss, Piramal, Tata Capital, right, or Bajaj. You can tell them that, okay boss, these are my mutual fund investments. You take them, you pledge it and give me an overdraft limit. So what they will do is they'll take your 1 crore rupees worth of mutual fund investments and pledge it and give you an 50% overdraft limit of 50 lakh rupees. Now this is an overdraft limit which will sit in an account. Okay, when you need the money, you will withdraw from that overdraft account, use the money, and when you have extra money, put it back in that overdraft account. This way, you don't have to sell your mutual funds. Before I share the secrets that we are talking about, we'll also understand this a little bit in detail. And if you want to apply for something like a loan against mutual fund, I'm sharing the link of Edelweiss in the description box below. You can apply all of it online. So like I said, these loans are given by lenders, banks and NBFCs alike. But you have to be mindful that when you go to a bank, the interest rate will be a little bit lower compared to an NBFC, but the maximum limit is also lower. Okay, RBI recently announced that the maximum cap for equity oriented mutual funds is 1 crore, but until then it was only 20 lakh rupees. Okay, before the recent RBI announcement, it was only 20 lakh rupees. So what it means that you could pledge 20 lakh rupees worth of mutual funds with a bank and you could get a 10 lakh rupees worth of limit. Now that's going to change. It's going to become 1 crore rupees. This is for equity, and the limit for debt mutual funds which own 100% debt is higher. You also get a higher overdraft limit of 80% compared to 50% with equity. It can be a little more than 80% also, but on a ballpark it's 80%. When it comes to non-banking financial companies, the amount of pledging of equity funds that you can do is 5 crores, guys. So this is where NBFCs win. You can pledge a higher amount of mutual funds compared to banks. Account opening is very easy and most of it is online, guys. You can reach out to your relationship manager in the bank and he will help you open it, or use the link of Edelweiss as I shared in the description box below. When you open your account online, you will obviously have to pay a processing fees. The processing fees ranges and varies from bank and NBFCs, but maximum that you will pay is probably 3,000 to 4,000 rupees for opening the account, and the interest rate also varies on the amount of capital that you pledge. Say for example, you pledge more than 1 crore rupees, you will get a cheaper interest rate, and if it's less than 1 crore, you will get a different interest rate. So on a ballpark, you will find this to be costing 9.5% to 10.5% per year. The sweet thing is you don't have to pay the interest on the entire pledged amount. Okay, you only have to pay interest on the amount which you have withdrawn. Let us take an example and understand. Say for example, you pledged 1 crore rupees worth of mutual funds and you got a 50 lakh rupees limit. Now you've withdrawn 5 lakh rupees from that and you used it for 1 month. You will be paying interest on this 5 lakh rupees just for 1 month, because you deposited back after 1 month. You only pay interest on this 5 lakhs for just 1 month, which will be, let us make a calculation. See, where is my calculator? Here it is. So if you say 5 lakhs, let us assume a 10% rate of interest into 10%, which is 50,000 rupees. Now you've used it for 1 month only, so divided by 12. So for 4,167 rupees will be your interest cost, which you have to pay, the next month. There is no concept of EMI in these kind of loans. Say for example, in the same example where you withdrew 5 lakh rupees and you don't have 5 lakh rupees to repay for a long time, all you have to do is just make sure that you pay your interest of 4,160 rupees every month. Interest has to be paid every month, otherwise it will impact your credit score and it will also lead them to levy penalties on your loan. So very simple process and a very simple product to understand. If you have any questions, feel free to ask me in the comment section. Now coming to my personal usage, right? So I do not sell my mutual funds whenever I need to use extra money. I just take it from my mutual fund, loan against mutual fund. So I just borrow money and use it, and whenever I have extra money, I pay it back and then I pay the interest. Now the sweet part, guys, let us say that you have a income other than a salary income. Okay, it has to be largely a business income. It cannot be interest income, cannot be dividend income. So if you have a business income in the form of, say, YouTube ad revenues, YouTube sponsorship revenues, or some consulting income, what you can do is you can offset the interest paid on these loans against that income. So let us take an example of my YouTube ad revenue. Okay, so when I'm earning some ad revenues on these YouTube, let us assume that I want 1 lakh rupees per year on the ad revenues, and I have paid an interest on this 5 lakh rupees of utilization of 50,000 rupees per year. So on the 1 lakh rupees income, I can reduce the 50,000 rupees interest and pay tax on the remaining 50,000 only. Yes, this is allowed, guys. If you're using money for your business or for anything, you can offset these interest expenses against a business income. So this is a great idea to reduce your tax liability, but it cannot be done when it comes to salary income, interest income, dividend income, right? For those kind of loans, you cannot do it. Same way when you have a rental income, right, and you also have a loan on that property. Okay, so for that property, for that rental income, you can offset the entire interest on against the rental income. So your loan becomes very cheap. So if I'm paying 10% on this loan against mutual funds, after 30% tax saving, my interest cost is only 7%, whereas my investments are going to earn more than 7%. So this way you can create a beautiful structure for your investments and for your money if you can use this loan against mutual funds concept very smartly. And that's what most wealthy people do, guys. Most rich people do. So you might have heard that a promoter has pledged their shares. They do the same thing. You can also pledge your shares, by the way. You don't have to pledge mutual funds only. Loan against shares is also the same thing. This thing works exactly same as mutual funds, right? When you're pledging your shares, you have to pledge your shares in your demat account and you will get an OD limit against that. I hope you learned a lot from this video. Comment and tell me if this was insightful, and we will make more of such videos for you. Do not forget to like, share and subscribe as usual. Thank you for watching.